We saw some more continuation early this week on Monday and Tuesday to the upside. If you remember from that last video, I was talking about continuation from this cup and handle pattern, although we have to be very careful, especially up here in this purple range that I have, because one, this is a key supply range. It's not as significant as this supply range over here between 4,450 and 4,500, which we did see a slight pullback from 2 times actually from back here before the cup and handle panned out to the upside, but also because we do have a very key date coming up that is Friday, July 21st. I mentioned this at the end of last video on Sunday. And why is this date so significant? Well, it's 3 variables that all converge at once to promote a reversal. If you're familiar with some of my reversal date cycles on this channel, I've shared the 18-day reversal cycle where every 18 days in a certain segment, you'll have some form of reversal. That's actually one of the variables that converges on here, but that would only be one concept that I'm using out of a total of 3. So there would be 2 other ones that I'm using. So that would be one concept out of 3 that I'm using to derive this turn date here. But again, this is very important on Friday, specifically because the trend right now has been up into this week. We did see actually a decent amount of downside after hours because of Tesla earnings. If I go over here to Tesla and also Netflix, of course, but Tesla earnings all the way down to 279 here in after hours. Not like it tanked an insane amount, only about 4% as you can see down here, but definitely a significant amount. And also these are the first 2 major tech earnings before the earnings season, and that typically sets a trend for the rest of the season, so that will have some implications on the rest of the market. The S&P 500 being one of the main culprits, as well as the NASDAQ, which there's a very interesting setup here as well, which I'll actually just talk about right now. We do have this super basic channel that we've been trading within. You can see here the lower end being the support, as well as the higher end being the resistance. And actually based on the after hours price action, we are below this lower level here. So I'm gonna be very interested to see if we open below it tomorrow, because if we do, a retest would be a very viable short opportunity, especially going into next week. Remember, my expectation here is, at least for the S&P 500, which I'll go back to that chart, I do expect there to be a pullback here starting next week. Should last 2 to 3 weeks max. We've already seen the desired move from the cup and handle. We're actually a little bit past the desired move from this cup and handle pattern. We're past that 4,450 to 4,500 zone. So I actually expect there to be some form of a pullback. How large will the pullback be? Personally, I believe we'll go back to around the 3,350, 3,380-ish range. So that'd be all the way back down to around where the handle of the cup and handle was at the high end, and then around this lower end where we did have that cup formation. I believe we are due for a pullback at this rate, especially because of how aggressive everything's been going up recently. So a pullback actually would be healthy for the market, paired with bearish seasonality that's approaching, as well as bullish seasonality for volatility, which has been hammered lately. I'll go to the VIX very quickly here, but the VIX in the 13s right now. It's stayed stagnant down here for quite a while, and only a very minimal spike that we saw in early July, with not that much of a downside correlation in price for the S&P 500. So would not be surprised to see an uptick here heading into August and especially September. Although at the moment, it only looks like it will be some form of a pullback / correction, looking into that September time range for the macro outlook. But at the moment, I'm only focused on the 2 to 3 week time range from here, which I do expect there to be a pullback. And again, like I said, I'd like to see price trend up into the end of the week here. And yes, we did see, like I just showed you on the Qs as well as the S&P 500, we did see this downside because of earnings after hours. But Thursday and Friday, especially throughout this year, have characteristically been green days. So I wouldn't be surprised to see some type of an uptick, whether we retest up here into that Friday reversal day, or if it actually wants to get back within the channel and then continue downwards after. We will see, but there is a good opportunity for a pullback here. So that's personally what I'm focusing on at the moment. Also, I do want to look over here at the dark pool levels. We didn't see that much to start off this week. 2.4 billion is a decent amount. This is at 454.11. And by the way, one of the reasons why I want to look at the dark pools here is if I am predicting there will be some form of a pullback and then / correction, and those two terms are different. A pullback being a slight drop in price, like 2 to 4%, a correction being about 5 to 10%. And that's arbitrary to the individual. That's my personal definition of both terms. But whenever you hear me say pullback or correction, now you'll know that's what I'm referring to. But again, the reason why I am looking at the dark pools right now is because if there is going to be some form of a pullback, I'd like to see signs of distribution, and especially up here in the 450s. We've seen a lot of prints for a while now, especially throughout that April to early June time period, which ended up being buys for that continuation upwards. But right here, when we're very overextended to the upside, I just showed you here after this cup and handle breakout, if we're looking at a lot of dark pool prints, which personally I'd like to see over 3 billion on a consistent basis, then there's a high probability that we will have some form of a pullback like I just shared with you here before. So 2.4 billion today, not an insane amount. If we actually look back to the previous day, very similar, 2.3 billion, also above 450. So that's good to see, but still we haven't had that one large print or consistent amount of 2 billion plus for well over a week, let's say. And then back over here for Monday, you can see this was the very minimal day in terms of premium with only 683 million at the 449 level. So this is a very, very light day. But for the last 2 days, a decent amount. I would like to see more heading into the weekend since we do have 2 more days. But nevertheless, I am watching that, especially up in this 450 plus range for the S&P 500. And again, watch for this July 21st date because I do expect there to be a reversal out of it. My bias is towards the downside. Of course, if we did go down into this, there could be a pop afterwards. However, I do believe that would be short-lived. I am adamant on there being some form of a pullback here into early/mid-August. So keep that in mind going forward. Also, one of the reasons why there is a viable outcome of a pullback in the rest of the market is just because the dollar is catching a bid off this level here. I've shared where I derived this trend line before, but just really quick, this is the one that goes all the way back to the dot-com bubble times. You can see from back here, from this pivot high in 2001 all the way down to this pivot high here in 2020, and we're just now retesting it. We did have a minimal retest over here. It wasn't an exact retest before the continued breakout into 2022, but right now we're retesting it on the dot. So I expect there to be a bid to about 101/102 max, which can bring some weakness to the rest of the market, mainly industrials and then somewhat the S&P 500. But this definitely doesn't help if the S&P 500 wants to continue its rally, along with this being paired with bearish seasonality upcoming here, and also that bullish seasonal period for volatility. So all that is converging at once here. And again, I only expect there to be some form of a pullback back to the levels that I provided between now and early August. Also, speaking of that bullish seasonality for the VIX, I did notice today that we saw a decent amount of premium behind these VIX calls, one of them being very far out the money. It's most likely a hedge at the moment here just because of how far out the money it is. But do watch the VIX flow right now, especially within the next 2 weeks, heading into that August and September time period, because if we do see consistent amounts of premium day after day after day for out the money calls, kind of like what we saw today, but even more so if it's a consistent amount every single day, then that can lead to an uptick in volatility heading into August. So I am watching VIX call flow at the moment. This is a decent amount, nothing too crazy. We've seen a lot more in previous days, but something to watch for because it can be a good indicator of an uptick in volatility in the future. Otherwise, my main watch is for this Friday for that reversal going into next week. So do watch this date specifically. Expect a quick retest of this 4,500 level, but the main retest that I'm going to be watching is this 4,450 level. This level will decide if we hit my eventual target of 4,350 to 4,380 because we would need to see a break below this level right here, which is the same level that we had a rejection off of both times in this cup and handle formation. So it of course will act as a support once it is retested. So mark this level on your chart as well as this entire range because it is a key range, but 4,450 will decide how low we go into the middle of August. Other than that, appreciate you all watching this video, and I'll see you guys next time on Sunday.